In this video, everything you need to know about Puerto Rico's tax incentives. I am a U.S. citizen as well, and like most U.S. citizens with a digital nomad, expat, make money online edge to what they do, I've considered moving to Puerto Rico. I've been looking into it. I know people who have done it. So in this video, let's explore why this U.S. territory is becoming a tax haven, focusing on the specifics of Act 60, its physical presence requirements, timeline, and the process to benefit from these tax incentives. Now, disclaimer, I have not gone through this myself, but I've been doing some research, so I'm basically just compiling what I have learned so far. Act 60 is the cornerstone of Puerto Rico's tax incentives. It combines what were previously known as Acts 20 and 22, offering some extraordinary benefits. So here's what you can expect under this act. For businesses providing export services, there's a flat 4% corporate income tax rate, one of the lowest in the Western Hemisphere. This applies if you're exporting services to non-Puerto Rican clients. As a bona fide resident of Puerto Rico, you'll enjoy 0% tax on dividends, interest, and capital gains from Puerto Rican sources. This means no local tax on your investment income if it's sourced from within Puerto Rico. Long-term capital gains from assets acquired after becoming a resident are completely tax-free. Even gains from assets owned before residency can qualify for a reduced 5% tax rate if sold after 10 years of residency. Additionally, there are significant reductions on property taxes for both businesses and personal properties, with exemptions reaching up to 75% for certain activities. Now, to tap into these benefits, you'll need to establish yourself as a bona fide resident of Puerto Rico. This involves several key steps. Probably the biggest one is the physical presence requirements. You must spend at least 183 days in Puerto Rico each year, but this is more nuanced than just counting the days. You can meet this requirement through several conditions. So one is be present in Puerto Rico for at least 549 days during a 3-year period. That includes the current tax year and the 2 immediately preceding tax years, with at least 60 days in each of those years. I know it's kind of complicated. If you don't meet this, alternative conditions include not spending more than 90 days in the U.S. mainland during the tax year, earning no more than $3,000 in the U.S., or having no significant connections to the U.S. during the tax year. Now let's talk about the timeline and the process, how to navigate the process. So before moving, start by researching and understanding the requirements. Watching this video is a good first step. You might want to visit Puerto Rico to get a feel for the place and to ensure it's a fit for your lifestyle and business needs. We highly recommend doing what we call a recon trip to see if it's somewhere that you'd actually enjoy spending more than 6 months a year. We've heard from some people that they kind of feel trapped on the island, that they're just not fitting in, they don't speak Spanish, whatever it is. So go check it out first before you make this life-changing decision, and just make sure it's kind of a good fit for you. And then the application. So you'll apply for a tax exemption decree through the SPB, the Single Business Portal online application platform. There's a one-time fee of $5,000 for individual investors, and you'll need to provide detailed information about your business or investment activities, proving your intent to become a bona fide resident. And then residency. So you'll want to establish your residency by purchasing property within 2 years of moving. This helps satisfy the closer connection test. You can look that up. Closer connection test, basically that you have more substantial ties to Puerto Rico than to the mainland of the United States. You'll also need to get a Puerto Rican driver's license, register to vote, move your bank accounts, and generally make Puerto Rico your tax home. There's also charitable contributions. You're required to make yearly charitable donations. For individual investors, this is set at $10,000 annually to local nonprofits, demonstrating your commitment to the community. Another important factor is documentation. We recommend keeping meticulous records of your days in Puerto Rico, including travel records, to prove that you meet the presence test. This documentation is crucial if audited by the IRS. Another important factor is annual compliance. Each year, you'll need to file an annual report with a $300 fee to maintain your tax benefits. This report will detail your compliance with residency and business operations. The benefits are not just limited to individuals. Specific industries can also leverage these incentives. They're trying to, attract certain industries to the island. So the tech and digital services businesses enjoy the export service decree, thriving with minimal tax burden. Manufacturing as well gets reduced rates and exemptions under Act 60. Tourism development benefits from tax reductions on income from hotel operations or tourism services. And the financial sector has opportunities with 100% tax exemption on dividends for international financial entities. However, there are considerations and potential pitfalls. One is U.S. tax obligations. Income earned from outside Puerto Rico still needs to be reported to the IRS if you're a U.S. citizen, as only Puerto Rico sourced revenue is exempt from U.S. federal taxes. And there are ways, of course, to make your income deemed Puerto Rico sourced versus non-Puerto Rico sourced, and there's kind of a whole strategy there. Two is compliance. The IRS is vigilant about these benefits, ensuring they're not abused. There's been increased scrutiny, and there's always the risk of legislative changes that could affect these incentives. And then the third thing is local impact. Some locals argue that these incentives favor the rich, which is probably true, potentially leading to gentrification, soaring property prices, blah, blah, blah. So we highly recommend basically getting involved in the local community and, really getting involved, all right? So in conclusion, while Puerto Rico offers compelling tax incentives that could significantly reduce your tax liability, becoming a bona fide resident requires a genuine move and lifestyle change. You're going to have to spend the majority of the year on the island. You're going to have to document that. There's a couple fees to pay, right? The process involves thorough planning, from understanding the physical presence requirements to navigating the application process. For those who qualify, it can be a strategic move for wealth preservation and growth. However, always consult with tax professionals to ensure you are following all regulations properly. If you want, you can book a call with MyLatinLife. There's going to be a link in the description where you can become our client. We can talk about Puerto Rico. We can look at your holistic situation, what you can do in your specific situation to lower your taxes, maybe also obtain residencies and passports around the world, offshore banking, internationalizing more generally. Because if you're interested in Puerto Rico, there might also be other options that can fulfill the same thing. Because in my personal opinion, this Puerto Rico thing is a little bit complicated. And so for me, at least, my current setup is using a zero tax state in the US, Florida, Texas, Nevada, something like that, and then spending the majority of the year outside the US to claim the foreign earned income exclusion. We have another video on the channel about the foreign earned income exclusion that you can check out as well. So there's lots of ways to do it, right? But yeah, book a call with us, and thanks for watching. Like, subscribe, and let's discuss this further in the comments below. Also, check out MyLatinLife.com to get more involved. See you in the next video.